Hey there, money mavens! Welcome to Ace Wealth Raiser, where we will be diving into all things related to the world of finance, economics, and business. Whether you are a seasoned investor or just a beginner learning the ropes, we've got something for you. From breaking down the latest market trends to decoding complex financial concepts, we are here to help you level up your financial game. ETFs or exchange-traded funds have become an increasingly popular investment option for both novice and experienced investors. These funds offer a range of benefits, including diversification, low fees, and flexibility. In this video, we will explore the advantages of investing in ETFs and providing practical steps you can take to maximize your investment potential. Whether you are new to investing or looking to diversify your portfolio, understanding the benefits of ETFs can help you make informed investment decisions. Number 1. Diversification. One of the primary advantages of investing in ETFs is the diversification they offer. ETFs hold a basket of securities, which helps reduce the risk of investing in a single stock. This diversification can help protect against losses in the event that one or a few stocks perform poorly. Suppose you want to invest in the stock market, but you are concerned about the volatility of individual stocks. Instead of buying shares in individual companies, you could invest in a broad-based ETF, such as the SPDR S&P 500 ETF or SPY. This ETF holds a diversification portfolio of 500 large-cap US stocks, giving you exposure to a wide range of industries and companies, reducing your overall investment risk. Alternatively, let's say you are interested in investing in bonds but are unsure about the creditworthiness of individual bond issuers. Instead of investing in individual bonds, you could invest in a bond ETF, such as the iShares Core US Aggregate Bond ETF or AGG. This ETF holds a diversified portfolio of investment-grade bonds, including treasuries, corporate bonds, and mortgage-backed securities, giving you exposure to a range of fixed-income assets while reducing your overall credit risk. Number 2. Low costs. ETFs typically have lower expenses than mutual funds or other types of investments. ETFs are passively managed, meaning they track an index rather than trying to beat it. This eliminates the need for expensive research and analysis, which keeps costs low. The Vanguard Total Stock Market ETF, or VTI, is a popular ETF that tracks the performance of the entire US stock market. This ETF has an expense ratio of just 0.3%, meaning you would only pay $3 in fees for every $10,000 invested. This low-fee structure allows investors to keep more of their investment returns and potentially compound their earnings over time. The iShares Core MSCI EAFE ETF, or IFEI, is an ETF that tracks the performance of developed markets outside of North America, such as Europe, Australia, and Asia. This ETF has an expense ratio of just 0.7%, making it an attractive option for investors looking for exposure to international stocks at a low cost. With low fees, investors can benefit from international diversification without sacrificing a significant portion of their returns to fees. Number 3. Transparency. ETFs are highly transparent, with their holdings and performance publicly available. This allows investors to see exactly what they are investing in and how the investment is performing. The Invesco QQQ Trust, or QQQ, is an ETF that tracks the performance of the Nasdaq 100 index, which includes the top 100 non-financial companies listed on the Nasdaq Stock Exchange. This ETF provides investors with exposure to some of the world's leading technology and growth-oriented companies such as Amazon, Apple, Google, and Facebook. The ETF is also highly liquid, meaning it can be bought and sold quickly and easily. This flexibility allows investors to take advantage of short-term market movements or adjust their holdings as market conditions change, making it a popular choice for active traders and long-term investors alike. Number 4. Flexibility. ETFs offer investors flexibility in terms of buying and selling. They can be bought and sold throughout the day, just like a stock, making it easy to adjust holdings in response to changing market conditions. The Vanguard Real Estate ETF, or VNQ, is an ETF that invests in a diversified portfolio of publicly traded real estate companies such as Real Estate Investment Trust, or REITs. This ETF provides investors with exposure to the real estate market, which can offer attractive income streams and potential for capital appreciation. One of the key benefits of Vanguard Real Estate ETF is its flexibility. Investors can buy and sell shares of the ETF on an exchange, just like they would with a stock. This makes it easy for investors to adjust their holdings in response to changing market conditions or investment goals. Number 5. Tax efficiency. ETFs are generally more tax efficient than mutual funds or other types of investments. Because they are passively managed, they have lower turnover, which can reduce the tax impact of buying and selling securities. The iShares Score MSCI Total International Stock ETF, or IXUS, is an ETF that tracks the performance of the MSCI ACWI EXUSA Investable Market Index, which includes stocks from developed and emerging markets outside the US. This ETF is designed to be tax efficient, which means it aims to minimize the amount of taxes investors pay on their investments. For example, the ETF may use in-kind transfers to minimize the amount of capital gains taxes that investors would otherwise have to pay when the ETF rebalances its holdings. As a result, the iShares Score MSCI Total International Stock ETF is a popular choice for investors who are looking to minimize the tax impact of their investments. Liking this video? Click the notification bell for more updates. You can also subscribe, share, and comment down below. Number 6. Accessibility. ETFs are accessible to a wide range of investors, regardless of their level of investment expertise. They can be bought and sold through a brokerage account, making them easy to trade. The SPDR Gold Shares ETF, or GLD, is an ETF that tracks the price of gold. Gold has traditionally been a popular investment for investors looking for a safe haven asset in times of economic uncertainty. However, buying and storing physical gold can be expensive and cumbersome. The SPDR Gold Shares ETF provides investors with an easy and cost-effective way to invest in gold, as it can be bought and sold on major stock exchanges like any other stock or ETF. This accessibility allows investors of all sizes to invest in gold without having to worry about buying and storing physical gold. Number 7. Global exposure. ETFs offer investors exposure to a wide range of global markets and sectors. This can help diversify your portfolio and potentially increase returns. The iShares MSCI EAFA ETF, or EFA, is an ETF that tracks the performance of the MSCI EAFA index, which includes stocks from developed markets outside of North America, such as Europe, Australasia, and the Far East. This ETF provides investors with exposure to a diverse range of international markets, which can help to reduce the risk of investing in a single country or region. For example, if the US market experiences a downturn, the international exposure provided by the iShares MSCI EAFE ETF may help to offset some of those losses. Additionally, the ETF allows investors to gain exposure to markets that may be difficult or expensive to invest in directly. Number 8. Reduced risk. ETFs can help reduce risk through diversification and their ability to be traded throughout the day. This makes it easier to manage risk and react to market volatility. The iShares Edge MSCI MinVol USA ETF, or USMV, is an ETF that invests in a diversified portfolio of US stocks that have lower volatility than the broader market. This ETF is designed to provide investors with exposure to the US stock market while reducing the overall risk of the portfolio. By investing in stocks with lower volatility, the iShares Edge MSCI MinVol USA ETF can help to protect against losses during market downturns. For example, during the market downturn caused by the COVID-19 pandemic in 2020, the iShares Edge MSCI MinVol USA ETF outperformed the broader market as investors sought out less risky investments. Additionally, the ETF can provide a smoother ride for investors who are looking to achieve long-term growth without experiencing the ups and downs of the stock market. By reducing the risk of the portfolio, the iShares Edge MSCI MinVol USA ETF can help investors to achieve their long-term financial goals with greater confidence. Number 9. No minimum investment. Many ETFs have no minimum investment, making them accessible to investors with any level of capital. The SPDR S&P 500 ETF Trust, or SPY, is an ETF that tracks the performance of the S&P 500 index, which includes the 500 largest publicly traded companies in the US stock market. One of the key benefits of the SPDR S&P 500 ETF is that it has no minimum investment requirement. This means that investors can buy as little as a single share of the ETF, making it an accessible investment option for investors with limited funds. For example, if an investor wants to invest in the S&P 500 but only has a few $100s to invest, they can buy a single share of the SPDR S&P 500 ETF for around the same cost as a single share of any of the stocks in the S&P 500. This allows investors to gain exposure to a diversified portfolio of US stocks without having to meet high minimum investment requirements that may be associated with other investment vehicles such as mutual funds. Before we proceed to the last point, do you have any thoughts on the advantages of ETF? Let us know in the comments section. Now for the last point. Number 10. Long-term investments. ETFs are an ideal investment vehicle for long-term investors. They offer diversification, low costs, and tax efficiency, all of which can help maximize returns over time. The Vanguard Total Stock Market ETF, or VTI, is an ETF that tracks the performance of the CSRP US Total Market Index, which includes nearly 4,000 stocks representing the entire US stock market. One of the key benefits of the Vanguard Total Stock Market ETF is that it is an ideal vehicle for long-term investors who are seeking to achieve their financial goals over time. By investing in a diversified portfolio of US stocks, investors can benefit from the long-term growth potential of the stock market while reducing the risks associated with investing in individual stocks. The ETF is designed to provide investors with exposure to the entire US stock market, which is a broad and diverse asset class that has historically produced strong long-term returns. In conclusion, investing in ETFs can offer a range of advantages for investors, including diversification, low fees, flexibility, and access to a broad range of assets. By following the practical steps outlined for each advantage, investors can minimize their investment potential and achieve their financial goals. Whether you are looking to build a long-term investment portfolio or make strategic short-term trades, ETFs offer a versatile and accessible option for investors of all levels. With careful research and a disciplined investment strategy, ETFs can be a valuable addition to any investment portfolio. This is Ace Wealth Razor, and we'll see you next time.